Call it the incredibly shrinking dollar. The dollar falling again against the euro today after that weak new home sales number. In fact, in the last year, the dollar's dropped 10% against the euro. The euro now costs about $1.41. And it's not just the euro. Last week, the dollar hit a 3-decade low against the Canadian dollar. This morning, the greenback hit a record low against a basket of 6 major currencies. As tracked by the New York Board of Trade, we're talking about the dollar index. So just how do you play and profit from that falling dollar? Peter Schiff is the president of Euro Pacific Capital, a broker-dealer specializing in foreign stocks. And listen, Peter, you're on a couple years ago, and you said that you thought global growth was going to outpace American growth and that the dollar would weaken. And we thought, no way. Guess what? You were right, and your clients profited from it. So congratulations on that. What are you doing right now, Peter?
I'm doing the same thing. The same thing I've been telling my clients for years. The same thing I wrote about it. I have a book that just came out called Crash Proof, How to Profit from the Coming Economic Collapse. And the premise of that book is the weakening U.S. dollar and how to reorient your investments. The single most important factor to consider when you're investing is the value of the dollar. We're all accumulating dollars in our brokerage accounts. But what counts is not how many dollars we have, but what those dollars are worth and what we can buy with them. And the dollar is becoming less valuable every day. And based on our economy, our huge current account, our huge trade deficits, our lack of domestic manufacturing, our lack of domestic savings, there's only one thing the dollar can do, and that's go down. And so even if the U.S. stock market gains in dollars, it's not going to gain in real purchasing power.
But Peter, my big beef with the U.S. dollar is that unless you're going to Dublin, get a pint of Guinness, that it costs more. I would presume, maybe I'm wrong here, that the average American investor out there, even some professionals, are really confused about what the weakening dollar impact means for their investments, mutual funds around the world. What does it mean?
The weakening dollar raises the cost of consumption here in the United States. Why do you think oil is $82 a barrel? Why do you think wheat is over $9 a bushel? When Americans are going to the grocery store and they see how much things cost, when they go to the gas station, they see how much it costs to fill up their car, that is a direct result of the weakening dollar. And as the dollar continues to lose value, everything that we consume in this country is going to cost more.
So what do? Go out and start growing wheat? My little plot in New Jersey? How do I profit from this, Peter?
Well, what you do is you do what my clients are doing at Euro Pacific Capital. You change your investments. You invest outside the United States. Instead of buying stock in U.S. companies, buy stock in foreign companies. Buy bonds overseas. Make sure that your income streams, whether it's dividend income or interest income, is coming in euros or Swiss francs or Canadian dollars or Singapore dollars or, Chinese yuan or Hong Kong dollars or Australian dollars. Get the currencies. Own the currencies that are gaining in value.
What about gold? Do we buy gold?
You better believe it. I've been buying gold for years. Gold's at $725, $730 an ounce. It's going a lot higher. I think over the last 8 years, it's averaged better than 15% returns per year, much better than anything in the United States. And it's a direct result of the inflation that the central bank is creating. When Ben Bernanke irresponsibly cut interest rates by 50 basis points, he basically pulled the rug out from under the dollar. He basically said the dollar is a bottomless pit. We don't care about the dollar. We don't care how low it sinks. And, the rest of the world is what's sustaining our economy. They loan us money. We can't borrow. Americans can't get a mortgage unless someone in Europe or Japan lends them the money. And they're not going to do it with a weakening dollar.
Gold a bit easier as an ETF. Wheat, things like that, a little harder. And we know it's dangerous for average investors to play in the commodity markets. Can you buy ETFs? There's some ETFs out there that mirror commodity prices.
Yeah.
How do we take advantage?
What's really dangerous for Americans is to be in this market, to be in U.S. dollars. It's much safer to be in commodities. But what I recommend is that my clients invest in companies that are in the business of mining or oil and gas or agriculture, or invest in the countries that specifically benefit from commodities, such as Canada, Australia, New Zealand. Own companies. We own utilities down there. We own real estate investment trusts down there. And the currencies of those major commodity exporters are all benefiting from the commodity boom. So you just invest in conservative assets in those countries, and you're going to get great returns.
The only thing I'm looking at, though, Peter, is that a couple years ago you had these commodity-based companies way down. Some of them have doubled, tripled, even quadrupled in 3 and 4 years. Valuations have gone up. At what point do investors know, they can't go any higher? They've already priced it in because the smart money knows it's coming and bought it 6 months ago.
No, I agree. I've been buying these stocks for my clients for years, and it's amazing how much they've gone up. But you know what? They're still cheap. When you look at the PEs, when you look at what's likely to happen to these commodities, this is still, early in the game. It's not, the ground floor, but it's not too late for people to get into these stocks, and it's certainly not too late for people to get out of U.S. dollars. It's a long way down.
All right, so what, but we often hear, Peter, very quickly, we often hear buy the mega caps, the GEs, because they're going to benefit no matter what. Is that false?
No. I mean, I wouldn't buy GE. I mean, if I was going to buy U.S. stocks, I would concentrate on the commodity sector, energy, anybody that's export-oriented. Stay away from anything that's dependent on the U.S. economy, which is headed for recession, on American consumers, on Americans borrowing money or spending money. But sure, you'll lose less money if you invest in U.S. multinationals. But why do that? I mean, the best thing to do is just avoid the U.S. market entirely and invest overseas, invest in the economies that are growing, that are saving, that are investing, that are doing it right, that have sound currencies. You know, just avoid the U.S. It's a huge ticking time bomb. There's a financial storm coming here. You want to get out of the way.
In Focus should move its show to Kuala Lumpur, kind of, is what you're saying, basically.
Well, I mean, you should definitely be, if you have any money to invest, you should move your investment money offshore.
All right, Peter Schiff, Euro Pacific Capital. Peter, a pleasure. Thank you very much.
Thanks for having me.